Hey guys, it's Ricardo Cobos with Keller Williams Realty. Hey listen, I wanted to just take a moment and record this brief video. I just heard on the radio something that hasn't happened in 9 years. By now you've probably heard that the Federal Reserve Board met this week and they just announced today that they were raising interest rates by 1/4%. Now that's not a big deal. Truth be told, 1/4% doesn't have a huge impact on your ability to purchase or sell a home. At least not most people. Now, some people living on the very razor's edge, yeah, sure, that's going to certainly impact their ability to purchase a home. But by and large, most people, that's not going to have a significant impact. But here's the thing. Here's what caught my attention. They also said that in addition to raising interest rates today, that they would also be raising interest rates every 90 days or every quarter throughout 2016, provided, of course, the economy continues on the track that it's on. So what does that mean to you if you're buying or selling a home? Well, if you're buying a home, it means that by this time next year, you can expect to pay probably around 5.25% to 5.5% interest, depending on the type of loan and where your creditability is. What does that mean practically? Well, let's say you were buying a house today for $250,000. Your monthly principal and interest payment at about 4% would be about $1,193 a month. Fast forward to this time next year, you can bet it's going to be closer to $1,400 a month. That's a significant difference. That's $200 a month difference. Now, while that may be a cell phone or a cable bill to some people like me, that's $2,400 a year. That's real money. So, how do you combat that? Well, let's say you don't buy a house today for whatever your reason is, but you buy a house next year. Well, now instead of buying $250,000 house to have a $1,200 a month house payment, now instead you've got to buy a $215,000 house or put an additional $35,000 down to buy the very same house. That's pretty significant. And if you've been out there shopping, you know for a fact in Wake County, there's a big difference between a $250,000 house and a $215,000 house. Now, what about a seller? Let's say you're selling a home. Well, if you're selling a home, now all of a sudden you've got much fewer buyers that are qualified to buy in your price range. Why? Because the more interest rates cost, the less money that buyers have in a monthly budget to buy a house. And frankly, let's be just really clear about it. Home buyers buy based on monthly payment. They go to the bank and the bank tells them what they can afford, and that's what they go out and shop for. Yeah, sometimes they'll shop a little bit less, but by and large, that's what people are going to do. So what does this mean for you? If you're a home buyer, now's the time to get in while the rates are still low. Look, we know they're going up. We've known they were going up. We now know for sure when they're going up. If you're a home seller and you're thinking about selling, now's the time to get into the market, certainly ahead of the spring rush, because there's fewer homes on the market. Yeah, there's fewer home buyers on the market, but there's also fewer sellers on the market, fewer homes to choose from. So if you're thinking about buying or selling, give me a call, hit me up. My contact information is in the link below. Whether you're looking to buy today or 2 years from now, I'm really just delighted to be helping you in the process. Thanks a lot and enjoy this wonderful December weather. Talk to you soon.